Hello, hello. Welcome back.
Hello, how are you?
I'm doing great. I like that little head little
Yeah,
head movement you got. Bringing the head
you know,
movement today.
little excitement. I
I
love
love
doing this with
it.
you.
I know, me too. Me too. Welcome back, everyone, to Living Richly with Curo. This is episode 19. Every week we say this, but I just can't believe that this is episode 19. So I think we'll just keep saying that on and on. We'll be at
Yeah,
like episode 200 and we'll be like, oh my God, it's episode 200.
we need to say it every time.
Every time, every time. But welcome back. My name is Anne McCabe. I am the CEO and a partner here at Curo Private Wealth, and I'm joined as always by my amazing partner, Atrisa.
Hello, I am Atrisa Roberts, COO, and a partner here with Anne at Curo Private Wealth.
I missed you. I'm glad to be back this week.
I know you are,
Our listeners
out
and
gallivanting around.
I was definitely gallivanting. Our listeners and viewers don't know that I was out because we try to stay ahead of the curve. So we don't want to miss an
Right.
episode for you all, but we actually did not record anything last week. So I missed catching up with you. We'll have a lot of catching up to do. So this week's episode is all around selecting your benefits. Tis open enrollment season coming up. So we thought it would be timely to talk with you about some things to be aware of and consider during this upcoming open enrollment season. But before we get into that, let's do a little A-team catch up. So again, I missed a lot being out last week. What's new in your world?
I don't know that much is new. Trying to get a little, sort of like last bits of fun in before summer officially ends. But I do have something that I just want to share just because I thought it was so sweet. So apparently Monday was Eldest Daughter's Day, like National Eldest Daughter Day. So my sister was like, Happy Big Sister Day. I want to take you out. So she took me down to City Swing, which is like a golf simulator studio in DC. I actually think they have a location in Reston now.
Ooh,
Yeah, so we went and did the golf simulator, and then we went to dinner over at True Lux. But it was nice just to like have my sister just celebrate me being her big sister, or as she likes to call me, her momster.
I was
Um,
gonna say momster. I love that. I was gonna say mom/sister for sure.
yeah, she calls me her momster. So that was really nice. So happy Eldest Daughter Day to all the oldest daughters out there in the world.
Woo woo. That is awesome. You deserve to be celebrated and have a blast. And she knows your love language is golf, so she
Yeah,
nailed it.
she did. She did a good job. So that was real. I thought
Golf
it
and
was really
golf and
thoughtful.
food. Golf and good food.
Golf and good food. Absolutely. Yeah.
Yay, that's awesome.
All righty. Well, tell me about, your travels, your adventures. What's going on in Anne's world?
Yeah, so I just got back from a little island off the coast of Georgia called St. Simon's Island. You've heard of it because you're from Georgia, but most people up
Hmm.
here are like, where, what, How on earth did you find that place? But I'm from Atlanta, and so we've been vacationing down on St. Simon's Island for forever. I think my
Mhm.
grandparents originally found the island, like I want to say back in the 60s or something crazy like that. So it's been a while. And my mom, we go every year for my mom's birthday. She turned 80 this year. So it was a massive milestone.
Happy birthday,
And
Mom.
yay, happy birthday, Bonnie. I also introduced, she didn't know about our podcast. I shaking my head, but I introduced her to, she's like, I don't even know how to listen to podcasts. So I'm like, where have you been? So
Right.
anyway,
We
hopefully
need
she's listening.
subscribers, Bonnie. Get with
Yeah,
it.
get with it. Exactly. Hopefully she's listening now. But we had a great time. Spanish moss, I tell you, I drive onto the island and I see the Spanish moss and the live oak trees, and it is just some other kind of beautiful and peace. You know what I'm talking about down there. It is just so special and serene. And the kids had already gone back to school in Georgia. So it was actually extra peaceful and the beaches were
Hmm.
extra empty, which is how we like them. Just, we woke up, even the kids woke up to take early morning beach walks and watch the
Aw.
sunrise, and then we went back to watch the sunset at the beach, and it was just a really lovely time. My goal was to get bored, and I actually got bored, which
Okay.
was what I was going for. So
Yeah.
it was a great time.
Good. Oh, I'm glad you had a great trip. I love St. Simon's Island. I love all of the sea islands, really. Jekyll is also one of my favorites. Jekyll is a little less active, I think.
Yes.
But yeah, I love that area. So glad you got
Yeah,
a chance to go and just woosah.
Woosah. Lots of reading, lots of chilling. So yeah, I love Driftwood Beach on Jekyll Island. That's
Mm-hmm.
so cool. So cool. If you're
Yeah,
ever down there, make sure to check that out. So yeah, it was a blast. It was kind of
good.
the
I'm glad you had a great time.
last hurrah of the summer.
Yeah. Now, when are your boys back to school?
They don't go back until after Labor Day. So they have
Oh, okay.
yeah, it's close, but they have a little
Yeah.
bit more time. So
Yeah.
they're enjoying
Good.
the last days. Yes. And I'm preparing myself to, for the crazy, the back to school crazy.
Right. When your schedule is in like full gear.
Oh my gosh. Yeah. Struggle with the juggle. So
Yeah.
it'll be fine. But yeah, had a great
course.
time. Missed you all.
Good. Well, welcome back. We missed you.
Thank you. I appreciate that. All right. So, as we mentioned, it is open enrollment season. And today we're going to dive into how to select the right benefits for you. And I think this is really a crucial topic, right? Because
Mhm.
what you decide to select for your benefits does have a massive impact on your financial position. And I feel like, especially if you've been with the same company for a while, people tend to just like auto enroll in whatever
Mhm.
they decided years ago. And that may have made sense for your situation 5 years ago. But the question is, does it still make sense for you now? And as we're going to talk about towards the end, companies are pretty much on an annual basis, I feel like, adding additional benefits. So if you
Yeah.
just kind of click through and don't really pay attention and sign up for everything you signed up for last time around, you may be missing out on some key benefits. So that's really what we want to talk about today. So let's start off with the big one, which is health insurance. This is one of the biggest benefits to consider. So Atrisa, do you want to kick us off with sharing some things to keep in mind when you are reviewing your health insurance options? And there's so many different plans and programs. How do you decide what is right for you?
Yeah. So you want to start with understanding what your own needs are, which is really important. You want to think about your health status, medical needs, because typically your health insurance options are going to break down into what we go think of as two pots. You're either going to be in what we call like a traditional PPO style plan where you're paying copays when you go see a doctor. Typically, we will say those kinds of plans are better for people who need to see specialists or go to the doctors more often. The other option is some variation of a high deductible health plan, which typically makes sense for people who are mostly healthy. They go to the doctor for annual physicals, but understanding where you are from a health perspective is typically where you start. For myself, and to your point, Anne, I started with this company, 7 years ago. So I've been on the same plan for 7 years. I was 7 years younger when I originally enrolled. And now I see that as I get older, my needs changed, right? So how many times I realize I see the doctor more often now in a year than I did 7 years ago. So that's the first place to start, is to determine what your actual needs are and how often you think you might need to see a health provider. Then you want to look at things like cost. But cost should not be the first point, right? So sometimes it makes sense to look at something that might be more expensive from a premium perspective if it meets your needs. But you do want to be able to compare the cost. Sometimes it takes doing some math, which I had to do myself because I've been on a high deductible health plan. And I'm like, well, I'm going to see the doctor more. Let's do some comparison and see if it makes sense. So you want to look at those things: premiums, deductibles, copays, your out of pocket expenses, and you really want to decide which one may work better for you from an overall cost perspective, and not just when you're looking at what the premium costs as you're clicking the options through enrollment. And then you want to check your network. For most people, they already have doctors that they are familiar with. They may already have a primary care physician or specialist that they like to see or would prefer to see. So you want to make sure that those doctors that you are visiting are included in the network of your plan. That's really important because you don't want to make a change to your health coverage and then realize your doctor who you loved is now out of your network. So it's really important to consider that. And then again, you can always make decisions about how you want to handle your healthcare cost. So if you've got lots of cash reserves. You don't need to see the doctor often. You feel fairly comfortable that you could cover an unexpected health issue or event with your savings or out-of-pocket expenses. Then something like a high deductible health plan might make sense. The premiums are lower. You're going to have more out-of-pocket expenses, but you might be comfortable with that. So really, it's not a one size fits all. For most people, you have to determine what makes more sense from your health needs and then also from your ability to cover the cost.
Yeah, absolutely. So just to double click on 2 points that you made. One is you mentioned yourself just through the process of aging. It's not like you've had a massive life event, right? To change your health situation. Thank God, by the way, thank God. But yeah, so I think a lot of people think, oh, well, if I get married or I get divorced or I have a kid or those sorts of big life events, that's when I really need to make changes to my health insurance. But to your point, sometimes you can just notice, oh, wow, because I'm older, now I go to the doctor more, or there's different kinds of doctors I have to see now that I didn't have to before. So just being aware of any sort of those life changes, not the massive ones that most people think of, but even some of the smaller ones too. And then the second thing to double click on is the costs. I think that so many people go straight to the premium and they think only about the premium and they want to go with the cheapest option for their monthly cash flow. But that really does you a disadvantage because you're not thinking about the overall cost, right? What are the copays going to be and the coinsurance and deductibles if applicable? So it really is making sure that you're assessing the full cost, not just the premiums.
Right. Absolutely. And I always will tell clients that we're working with as well, even if you decide that a high deductible health plan works for you, you want to take full advantage of it and use other things that are available to you that are attached, like HSAs, which I know we're going to get into, but you don't want to just make the decision based on the fact that the premium is lower. It may not make sense for you, especially if you're not taking full advantage of all of the options that you get as a part of that plan.
Yeah, exactly. Awesome. All right. So now let's talk retirement plans. This is usually the second big benefit that people think about. And the first thing we want to mention is to be aware of and take full advantage of your employer match if your employer offers a match into your 401k. This is what we call free money. Atrisa and myself are big fans of free money. So
love it very much.
Love free money. Make sure you're taking advantage of this. One of the best things that ever happened to me is I, as you know, started working in banking like 2 weeks after I graduated high school. And I remember my manager was like, hey, did you sign up for the 401k? And I'm like, what on earth is a 401k? And he explained it and sat down with me. And it was one of the best decisions I ever made, signing up for a 401k at the ripe old age of 18. The whole concept of free money. And boy, am I glad that I took advantage. Now I was making like, $2 an hour or something. So I wasn't funding a lot, but nonetheless, I was funding. So that was a great piece of advice. Second, we want you to consider Roth options. So shout out to our episode number 10. We recorded an entire episode on how you make the decision between pre-tax, Roth 401k. Maybe you do a combination. So we're not going to get into too many details on that today, but make sure you consider your situation and whether or not funding at least partially to your Roth 401k makes sense. Because pre-tax was the only option for so many years, I think the default is people just, again, sign up for what they had before. But this is a great time as you're assessing all of your benefits package to determine, does it make sense for me to make any changes to how much I'm funding to pre-tax versus Roth? And then lastly, with the 401k or any sort of retirement plan that you have available to you, whether that's a TSP, 403b, et cetera, is to consider your investment options. So we don't want that money that you're about to fund in the 401k, God forbid, sitting in cash. One of the most powerful things about having a retirement plan is you have time generally on your side, compound interest, and your money can really grow over the long run. So if you work with a financial advisor like us, part of our offering when we're doing financial planning for clients is to help them build out an appropriate allocation based on the funds that they have available to them in their retirement plan. So if you're working with a 401k, shoot your advisor the options, ask them if they can take a look at the options and build an allocation for you, because they'll know your goals and your time horizon and your comfort level with volatility. If you're not working with a financial advisor, you will have access, probably most likely, to what are called target date retirement funds. And these are a beautiful option if you're not working with an advisor, because they are set it and forget it. So you're going to pick the year that is closest to when you think you are going to retire. You can put 100% of your allocation in that, and it will automatically rebalance for you, and it will automatically get conservative as you get closer to that retirement age. So it is very low maintenance. You don't have to worry about doing a bunch of research on the funds that you have available to you. So again, that is what we would recommend if you are in a situation where you are not working with an advisor.
Yeah, I really want to highlight on that point too, because us being in the DC metro area, we have lots of clients and people who work for the federal government. So they typically are funding thrift savings plans versus 401ks. But in the same way, it's important to be mindful of the investment option. I have come across so many clients who will onboard with us. And when we get statements from their TSPs, I realize that they have been in the G fund for years. I believe it might be the default option in a thrift savings plan. So you really want to pay attention. Thrift savings investment options are a little bit different from a traditional 401k, but the G fund, just so that you know, stands for government securities. And typically it's nothing more than like a money market fund. So people who have been contributing to TSPs for multiple years while they've been employed and haven't gotten that advantage of the compounding growth of having, an exposure to stocks can really limit your retirement savings over time. So you really want to pay attention to that if you are a government employee who has a TSP. The TSP version of a target date fund is called a life cycle fund, and it works exactly the same as Ann just described. You pick a year that's close to the date that you want to retire, and it'll rebalance. The allocation will change as you get closer to that retirement date. So for all the TSP owners out there, please pay attention. And if you're in the G fund, talk to someone about what your investment options could be.
Yeah, it always hurts my heart when I see that, because what a missed opportunity
Right.
for growth. And I think that so many TSP participants, it is true that the G fund is unique to the TSP, but if you look at the actual internal rate of return that that fund has generated, and you compare that to what you could have gotten, for example, even in a balanced portfolio, it doesn't have to be 100% stock, massive difference in returns there. And again, you compound that over decades, and we're talking about potentially, hundreds of thousands, if not
yes.
more, of difference. Yeah, huge wasted opportunity there. So now let's talk a little bit more about, we mentioned HSA earlier, so let's dig into that a little bit, and then flexible spending accounts and what the differences are between the two.
Yeah, Ann and I are huge fans of HSAs. We actually have recorded an episode, I think it's 6 of this podcast, all about it. It's the only, I think, investment vehicle that gives you a triple tax benefit. So with HSAs, and you qualify to be able to contribute to one by having a high deductible health plan. So that's the qualification for being able to establish an HSA. But the beautiful part about it is that you can make pre-tax contributions to it. Some employers even match. I've even seen some companies now that will just make a contribution on your behalf without you making any sort of contribution. But then the money, of course, grows tax deferred. So it is a tax advantaged account. So the money that you put there, and if you have over a certain dollar amount, that money can be moved into investments. You don't have to hold it in just cash. And then those investments can grow tax deferred over time. And then the beauty part of it is that if you take the money out for qualified health expenses, so if you use that money toward qualified health expenses, bills from doctors. Maybe you had a surgery. You can even use them for some prescription drugs. Amazon now has things that are HSA eligible. But if you use them for any of those qualified expenses, you also get to take that money tax-free. So that's what we mean about the triple tax advantage of it. It's tax advantage contributions, tax advantage growth, and then tax advantage distributions. So if you do have a high deductible health plan, it is a great way for helping to save toward those future expenses, especially because you're going to have higher deductibles, higher out-of-pocket expenses. But I believe, as Ann shared in that podcast episode, if you can afford to pay those costs out of your savings or out of your cash reserves, we even think it makes sense to not necessarily use the money in the HSA to pay for it and allow yourself to get more years of that tax advantaged growth. It can be a really powerful tool. And the other beautiful part about an HSA is that it's always yours. It's portable. So even if you established it when you enrolled with your current employer and then 3 years down the road you change jobs, that HSA comes with you. You always own it. You have no time limit for when you can use that money. And it's a good way, again, to not just save for health expenses, but just to save for the future, just in general. It can be a really powerful retirement savings tool.
Yes, we love HSAs.
Yes, very much.
I think especially when HSAs came out, there was quite a bit of confusion about HSAs because of FSAs. So flexible spending accounts, the big difference between an FSA and an HSA is with the FSA, it is use it or lose it. Versus, like Teresa was just talking about, the HSA, if you don't use those funds, and we would encourage you not to, if you can swing it from a cash flow perspective, those investments and that money just rolls forward. It's like another investment account. Think of it as like a 401k for your healthcare expenses in retirement, or even now. So back to the FSA, the challenge is you can have dependent care FSA or a healthcare FSA, or in some cases, it could be either. But you have to know or have an idea of the expenses that you are going to have for those categories. So, for example, with a healthcare FSA, if you know your kids need braces this upcoming year, then you know you're going to be spending a pretty penny on that. Or in my case, I always do the dependent care FSA because I have no problem spending $5,000 per year on summer camps and, aftercare activities or after school activities and things like that. So I have no problem spending that money. But if you are not in that situation, or you're not sure if you're going to have these expenses that qualify, we would discourage you from using the FSA, because if you don't use that money in the year, then it is gone. And there are some creative ways. Teresa mentioned there are even some products on Amazon. You can go to the, drugstore and spend a bunch of money on things like Tylenol, but there's only so much you can really spend on those things, or you'd want to spend on those things. So just be really careful from a planning perspective. It can be beneficial because that money does go in pre-tax. So you're saving money on taxes today. And as long as it's a qualified expense, you're not going to be taxed on it on the distribution side either, but it does require just a different level of planning.
Yes. And you also want to be mindful of what that time window, that time frame is for when you can use it. I have seen some employers that let you go into, I think, like March 1st of the following calendar year. So you just want to pay attention to know exactly when you have to use that money before they take it away.
Yeah, exactly. And at least the way that ours works is you pay for that expense and then you get reimbursed, at least on the dependent care FSA side. So you log on and you record the expense. And then you also on your tax return have to put down how you spent that money and where you spent that money. So it does require, a certain level of administration there. But again, I'm all for saving as much money legally as we possibly can on taxes.
Absolutely.
Yeah. All right. So let's talk lastly about just some of the kind of miscellaneous benefits that we wanted to mention as well.
Yeah. So most employers now, their group coverage plan offers all kinds of different benefits. One of the things that you can pay attention to is like life insurance and disability insurance. Most plans also offer some sort of accident and dismemberment insurance that you want to look at. Usually in your just basic default coverage, you'll enroll for some type of basic life insurance coverage. Usually it's some multiple of your salary at the time, a 1 or 1.5 or a 2 times salary. You can always look to increase that. Of course, it's going to increase the premium cost that you pay, but group life insurance is always going to be significantly cheaper, just like health insurance, than if you were going out into the free market and looking to buy insurance yourself. So if it is an option and you think you might need, if you have children and you want to increase that life insurance coverage, it's a good time to do it during your enrollment. And then the same with your disability coverage, which will help to replace income should you become disabled in either a short-term or a long-term time frame. So you want to pay attention to that. You want to make sure that you're paying attention to how much of your income will be replaced. It's not typically 100%. I actually have a friend who went on a short-term disability and was caught off guard by how little of her income was replaced. So you want to make sure as you're going through enrollment season that you're not just clicking through to get through all of those default settings, that you're really paying attention, because it really might make sense to bump up some of those coverages if you can afford to.
Yeah, exactly. It's like we kicked off by saying, don't just assume that whatever you signed up for last time or 5 years ago is still applicable to you. I think disability is one of those things that people really overlook. And,
Yes.
Anything can happen. I mean, an illness can happen, an accident can happen, and it can make it so that you can't do your job for hopefully a temporary amount of time. But having that income protection is key, because you don't want to go from making your salary down to zero, right? That would not be a good situation for your financial plan. And certainly, if you have a family or anybody else who depends on you, that would be really, really terrible. On the life insurance comment, I do want to recommend that folks also consider what the outside options look like, because one of the disadvantages of getting all of your insurance anyway through your employer plan is a lot of times there's not portability. So if you leave that employer, and let's say you go to a startup and the startup doesn't have life insurance or has a lot less life insurance than they can offer you, then that would be a disadvantage, right? So I think especially depending upon how much you need and what your age is, you really want to make that decision carefully. And it's fine to have some of your life insurance through your company, but you may want to consider having an individual policy also outside, just that you own, and that will, stay with you for at least the term period that you get.
Yes. Very good point.
Yeah. And then another, I know we've said this over and over again, but another reason to take your time to go through these benefits is I feel like pretty much on an annual basis, companies are adding different benefits, additional benefits. So, for example, with our corporate partner, we have access to pet insurance. There are prepaid legal plans. You can get discounted identity theft. Even this year, our corporate partner started helping with student loan repayments, which is incredible. So, Atrice and I made a point to make sure that our entire team was aware of that new benefit, because again, free money, we will take it, especially when it comes to helping with student loan repayments. Oftentimes there will be some sort of discount or some sort of allowance for gym membership. So I think as companies are really trying to make themselves look more attractive to employees and really trying to support their employees as much as possible, they're getting quite creative with these sort of miscellaneous benefits as well. So we want you to make sure you're taking advantage of all of the perks that are available to you. So please do take some time to understand what is available to you, how it works, and whether or not you think it makes sense.
Yeah, and it is to the company's advantage for their workforce to be as healthy as possible. So lots of companies now are even offering incentives to different health benefits. I know in our plan, if you track so many workouts a month, it makes you eligible for a $20 gift card. And again, it's small little incentives, but we like free money, and a $20 gift card is free money just for doing.
Hey, what? I didn't even know that. I missed that one.
Okay, I'll send you the link.
Please. Please. See, I mean, I sound like a hypocrite right now because I had no idea that was available to us. I'm signing up for that for sure.
Yeah, but I mean, again, you're already a person who works out every day. You go in, I think you click a button and say, oh yeah, I've done this many workouts this week, and so many makes you eligible for different sort of like free gift cards and gift certificates. And it's a real, I mean, they're small, like I mentioned, but again, it's free money, and why not? You're
Yeah,
working out anyway. Might as well
exactly.
get a gift card for it.
May as well get paid. May as well get paid for it. So yeah. Awesome. So happy benefits planning. Grab a nice maybe latte or beverage of choice and just take your time, sit down, look through the benefits, read through everything. If you have any questions, Teresa and I are always happy to help. You can check us out online at curoprivatewealth.com, and there's a way to communicate with us and send questions in that way. So we'd be happy to support if we can answer any questions for you. So with that, Teresa, let's go into our closing thought for the week.
Okay, so my closing thought is, I guess it's probably more personal, but I realized that it's been a year, and I'll share this. I mean, I think you and I chatted about this earlier. It's been a year since I stepped into my new role here at Curo as a partner and as lead advisor for our clients. And I literally cannot believe how fast that year has gone by. Like when you reminded me of it, I was like, oh my God, it's been a year. And I feel like it's been, I stepped into the position and just hit the ground and just, kept going, right? It's just I call it churning and burning, right? You're just churning and burning through it. And then you look up one day and you go, oh my God, it's been a year. So my closing thought, I think, is a reminder to myself to stop and smell the roses occasionally. And again, I think I've said this on this podcast before, I can be a glass half empty kind of person. And I think it's also an important reminder to remember how much work I've done and how challenging but yet rewarding the last year has been. So I am really trying to be deliberate as we go into this sort of second year of this new space for me, trying to be more grateful about the opportunities, grateful for the clients I get to work with every day. And even when the days are hard and the work is tough, to remember why we show up and to express gratitude. Because it's been a challenging year, but it has been absolutely rewarding. And I say it all the time. It's always a pleasure working with you. But I don't know that I want to be doing this anywhere else than where I'm doing it right now. So I just want to take a moment to just say thank you to the universe. Thank you to you. Thank you, to myself. As Snoop Dogg would say, I want to thank myself for showing up every day and doing the work. So that's really kind of what's been on my mind the last couple of days, is to just take a moment and just be appreciative of the opportunity.
Yeah. Well, that's beautiful. Thank you. And I think one of the reasons it has gone by so fast is, like you said, you just slipped right into that role. And, yeah, I mean, it was so, at least from the outside observing you, it was so seamless. You just went right into it and you took over and, started reaching out to clients and having the meetings and, continuing to be our operational star as well, and our operational rock, which we have always needed and continue to need. But from an advisor role and a partner role, it was just so seamless. So I think, you didn't take any like wind up time. It was like, okay, you're jumping off the cliff right into it, and you've done an incredible job. And, our clients are so fortunate to have you. We've gotten nothing but amazing feedback from them, and our team is so fortunate to have you, and I'm so fortunate to have you as a partner. So you're doing an amazing job. And I really do think it's super important to pause and celebrate your hard work and your accomplishments, and be grateful, as you said, to the universe. And so make sure that you do something, please, special to not just celebrate that you are the older sister and the momster, but that you're a rock star in this financial services space, and you're doing an amazing job. So
thank you. I appreciate that. You tend to help give me some perspective on how things are not all bad all the time. I'm always like, hey, it's so bad. And you're like, but it's not. I'm like, okay, I guess it's not.
I guess it's not. Yes, exactly. I am your yin to
Yes,
the yang. I am the
absolutely.
glass half full to your glass half empty. We balance
And
each
it's
other out well.
appreciated. Yeah, and it's
Yeah, no.
appreciated.
It's and likewise on my side, I sometimes need you to be like, "Meh, the glass is actually half empty." And I'm like, "Really? I think
Sometimes I
that's
feel
water in
like
there."
you're like a helium balloon, and I'm like grabbing the string every now and again, like, no, Ann, no, no, no.
Exactly. Yeah, pulling me back down to earth, which I need. Again, we're a great balance. So
Yeah.
it's awesome. So I have a super random closing
Mm.
thought of the week. I went down a YouTube video rabbit hole the other night
Uh-oh.
about castor oil. And I'm like
Okay.
convinced that this stuff is just like God's creation miracle. So I have a bottle on order from Amazon. I will keep you posted, but if it does half of the things that I watched this YouTube video about, I'm going to be super excited. So I will come back and
Yeah.
report.
Let us
Do
know.
you use castor oil?
Yeah, my grandmother has sworn by castor oil from that. I actually think I have PTSD
Oh,
about the like taste of it because it's actually pretty disgusting. But there was always some in the refrigerator at my grandmother's house in any ailment. Grandma, my knee hurts. Grandma, my tummy hurts. It was always, oh, you need a tablespoon of castor oil. Like she, to the point of the YouTube video, she probably produced half those. She swears, she swears by it. She thinks it is like the cure all to everything. Now, again, I haven't had any since I was a kid, so I'm interested to know if you agree with her. But growing up, it was a staple in our healthcare routine was to take castor oil as the medicine.
okay. So I'm not planning to ingest it. I'm planning to use
Oh, I've
it. Yeah,
ingested it.
like on my face, your eyelashes, on your like just almost like a hydration lotion kind of
Hmm.
thing. So yeah, TBD. I'll come back and report. But there were some things that I watched about like it can be helpful with digestion. There was this really weird thing where this lady put some in her belly button and just like laid there, and apparently it cured
Oh,
her
I've heard of that though.
yeah,
Yeah.
her digestive issues. So again, we'll see. But I'm excited. I can't wait for that bottle of
Yeah.
castor oil.
Anytime someone tells me they went down a rabbit hole on YouTube, I'm always like, "Oh God,
I know.
what did they find?" It can be a
I
scary
know.
place,
It
but at least
really
you came
can.
back with something healthy. Yeah, I mean, I am convinced that nature has given us all we need to take care of ourselves and to heal ourselves. I mean, I think that's where pharmaceuticals start anyway, right?
Yeah.
Botanicals
Yeah.
and
Yep.
plant-based sorts of things. And it's just about figuring out the things that really do work and heal us because I think they're better for us. So please, I'm excited to know your thoughts. Let's give it 4 weeks because I
Yeah. I was
think you
gonna say a
probably
month.
need 30 days of good
Yeah.
use. And then you have to give us a report.
I
And if
will.
so,
I
I'll buy
will.
it by the case. If your skin glows, I will buy it literally by the case.
Yeah. Okay. All right. Well, more on that. More on that. That's what I was thinking. I'll come back and report in a
Yeah.
month. But again, if it does half the things that
Yes.
this lady said it did for her, then I'm sold. So
Yeah.
all right. Well, that wraps us for this week on that random castor oil. So, thank you again so much for joining us. As always, send us your questions if you have financial questions or some sort of goal you're working on. You're thinking about quitting your job and starting a business, whatever. We want your questions. So, send those in to podcast@curoprivatewealth.com. If we answer your questions on our pod, we will send you an Amazon gift card, a $10 gift card as a thank you. As we said, free money is free money. So
Yes.
we'll take it. All you have to do is send a question. And please make sure to give us a review. Let us know what you enjoyed about the podcast this week and share this with your colleagues who are also going to be dealing with open enrollment. Just share it with one coworker. That's our ask this week. Just
Yeah.
share it with one person. We would appreciate it. So until next week, we hope you live richly and we'll see you then.
See you then. Thanks for joining us.